Alrighty, we are live on this beautiful Wednesday FOMC pre-morning. God bless you guys. Thanks for being here. And yeah, you know, it's pretty much just been Chop City. It's literally been Chop City since Monday. We're in this little tiny range here. We came to the low of the range. Well, we came to the high of the range, we came to the low of the range. We're back at the high of the range. Could very well make it back down to the low of the range. And yeah, so just to keep things quite simple here, before we get into a trading plan, I think it becomes pretty obvious that the two major levels, like if you're not interested in Chop City trading, which you might be, you know, then the two major levels are going to be 113, the value area low of the range, and 118, the POC of the range. If we start to get insane action, let's extend this to the right. If we start to get insane action at or around FOMC, these two areas are going to be the areas that we would be interested in trading, right? A simple back test of the value area low of the range for a long, or a simple tap into the macro golden pocket, the POC for the short, right? And obviously that short could make another higher low and continue up. Or if we start to lose this kind of trend line we have here, that short could make it back down to 113. You know, so we could be looking at something like this for either Pump City or that actually is a macro lower high, and we continue down even lower. So really just for the high time frame stuff here, higher time frame, these are really the two most important levels here. All right, so I'm just gonna post this. These are the two most important levels on our higher term time frames. By the way, guys, the code for today's eggs is J. I'll post it in the chat here. Okay, get it out there early. You know, the early bird gets the worm, and in this case, the worm is the egg. Actually, my chickens are late layers. You can't get eggs if you're early. You gotta wait until like 11. My chickens wait until McDonald's stops serving breakfast until they start laying. All right. It's actually in an effort to help keep America healthy, make America healthy again. It's part of the MAHA movement. MAHA. The reason why it's part of the MAHA movement is because anybody who sleeps late enough to miss breakfast at McDonald's obviously needs a little bit more whole foods in their life. These are the two most important levels for today and the rest of the week. Alrighty. Cool. So now let's do some real analysis here. And I'm going to pull open my different chart here. My June 2024 chart, which is my current up-to-date chart. Because, you know, it's been a while, guys, since I changed the name of my chart. Yeah. So we pretty much got the same thing here, guys. 113 being not only the macro value area low, but it's also the anchored VWAP of the rise. We have a single print and, you know, the Fibonacci golden pocket. All right. Let's go ahead and go to our daily time frame here. And let's see if we have any new naked points of control. No. No, we do not. But this is no longer daily. Let's go to the weekly. See if we have any new naked weekly points of control, because I forget if I even did that on Monday. Nah, we got nothing, y'all. We've got nothing. Alright, so where does that leave us then? That leaves us here. In the local range. Alright, so I'm just gonna do some TA in this local range here. I understand that, you know, I've been more swing trading lately, so I'm always going to be marking out the scalp levels, even if I'm not interested in taking them. But this is our sideways range right here. We've got that volume pull, and I'd say we also would have this volume pull. Okay. Shout out to whoever gave a thumbs down. May God bless you, and if you want a refund, I will gladly refund you. If you're dissatisfied with the value of the community, you know, I don't want anybody to feel dissatisfied. You know, that's not what I want at all. So make sure to let me know. Send me all your complaints. You know, let me have it. Lay it on thick. Lay it on thick, baby. I like it thick. You know, what can I even say about all of this right now? Like, so I'm gonna go down to a lower time frame here. It's really hard for me to get excited about any kind of potential scalp trade right now. To be honest, the only good trades would be around here or below this low, taking out the low from Monday, actually knocking into the naked point of control here. Taking that low from the range again would actually be quite nice. This would be a scalp trade that I would be definitely interested in. That I would actually take for sure. This is the same trade I was basically looking for on Monday. Up to this area. The problem with scalp trades too, guys, is this. You know, if there's a level locally, it's kind of like a hit or miss, right? You don't. It's not a high probability setup, you know. Let's check out Market Cipher B here. Definitely, this looks very bearish up here. Money flow coming down, momentum waves getting lower. I would love to see 24-minute, 12-minute, 6-minute bullish divergences. This would be an excellent setup right here. Now, let's plan for how we would actually enter into this trade, okay? We're looking for a long from the low of the range. We're looking for a bounce from around the naked point of control. We're interested in taking a trade if we lose the low from Monday and get a bounce from the naked point of control. I'd say it's not too crazy to plan for this trade with a 0.4% stop loss and shoot for about a 3% move up to our Fibonacci golden pocket zone. All right. So this right here is a 7-to-1 risk-reward ratio, which means we'd be risking 1 in order to make 7. So here's how we plan for the trade. Let's assume we have a $1,000 account to trade with. So if we have a $1,000 account to trade with, we do our formula, which is we're risking 1%. So we do 10 divided by 0.004. We're dividing the amount of dollars we want to risk by the stop loss, which means we put $2,500 onto this trade. All right, so if we have a $1,000 account, we want to risk 10 bucks. Let's put $2,250 on the trade to account for fees. All right, money flow increase. Spelled that wrong. So we would put our, we're already planning for this, assuming we have a $1,000 account. You know, 1,000 account, risking 1%. We do 10 divided by 0.004 equals 2,500 bucks. So we put 2250 position size just to account for the fees and stuff like that and slippage, right? And then what we're going to do is, because of the 7-to-1 risk reward ratio, I'd say if we come back up to even just the value area high of the range, or this historic high, this is a 5-to-1 risk reward. So a 4-to-1 risk reward, that's going to be about a 1.6% move. You know, I would TP, this is just the way I would do it, TP half the trade at 116K, you know, at 116 equals a $20 profit. And now we've risked 1 to make 2, and then we let it ride again up to, you know, our next area of resistance, an 8-to-1. Now we can take out half the trade again, TP2 at 118. Equals another $20 TP2. So now we've risked 1 to make 4 so far. And now we still have 25% of the position open. And we hold that to $125,000. Right? So $125,000, that would be a new all-time high. And that's going to give us a 20-to-1 risk-reward ratio. All right. So that we could close the whole trade and make another 50 bucks. And then we risked 10 bucks to make 90 bucks and 3 take profits. All right. This is like an example plan. All right. So now that we know all this information, if price comes down to our level, what do? We don't panic. We watch and we wait. We ask ourselves, you know, we come down to the naked daily point of control. Are we getting a little bit of a bounce? If we are, then we take the trade so long as we see on our 24-minute time. Like as we're coming down, right? This is how you're going to do it. As you're coming down, let's say we're here at the value area low. As soon as we lose this low, you already should be knowing what the 24-minute looks like, right? Is the 24-minute looking like this? And there's another wave forming right here. If this is what the 24-minute looks like, you should be ready to take the trade. Then go to the 12 minute. What's the 12 minute looking like? Is the money flow getting higher? Is the momentum waves getting higher? You're not looking at the dots. You don't care about the dots. Turn the dots off, Market Cipher, if they trip you up. All right, don't worry. There's a red dot printing, looks bearish. No, don't worry about it. Can you draw a line from momentum wave to momentum wave? And is the money flow getting higher? If the answer is yes, you should be ready to take the trade. Then you go down to the 6 minute and look to see, can you draw a line like this, right? On momentum waves, is the money flow getting higher? If the answer is yes, if you look at your 6 minute and let's say it looks like what it looked like back here, all right, then yeah, you would absolutely take that trade with the planned position size, put your stop loss under that low, and then let the plan play out where you're looking to make at least 2 on your 1 that you risked, and potentially we understand this could be a swing trade up to a new high, $125,000. So I'm going to go ahead and post this in the Discord. All right, this is true for any level you're trading. You should be planning all this stuff out in advance. The last thing you want to do is FOMO, 100x, 200x, full account, no stop loss, no plan, and, you know, be stuck in a bad situation, you know? All right, so after that, I'd say the next long, obviously, is going to be 113. You know, it's going to have to be 113. What is even going on here with all these levels here? Why are they... Wait a second. There's something up here. There's something up. Are all my folders gone? No, here they are. That was weird. That was really weird. It looks like I'm missing a lot of my TA here. Okay, well, the next long trade here is going to definitely have to be coming down to this area. All right, the anchored VWAP. Invalidation is below our 786 there. And same deal. This, we're looking, remember, the whole idea here is that we're looking for a backtested value area low up to value area high at 120. And then really, I would say we would be looking for a $125,000 new all-time high. All right. So this is a swing trade here, because if we go to our 4-hour time frame, we're literally longing value area low, shooting for value area high. It's a swing trade. We're from the low of the range to the high of the range, anchored VWAP, right? So far, everything about this market structure is bullish. We've got ourselves a low. It's not the best low, but we still have it. Higher high, higher low, higher high, higher low, higher high, right? So that is what we would be looking for there. And on this one, you know, I think it's safe to say that we would want to see a bullish divergence. Oof, is this a bear div on the 4-hour? Oh my goodness. Talk about wrecked city, man. This is not good before FOMC. It's freaking me out. Yeah, for this, I'd say we would definitely want to be seeing our 4-hour giving us this. There's two ways this could happen, okay? Way number one, it happens quick, all right? FOMC happens, Jerome Powell comes out, he says, look, I'm super hawkish now. You know, I know we cut interest rates, but we're probably not going to cut interest rates again for 25 million years, okay? And we get a big drop, big capitulation drop, happens quick, all right? If that happens quick, we have a bull div on the 4-hour, excellent, we take the trade, right? Second way is Jerome Powell comes out, and guess what? Nothing happens. We chop around. We don't even hit the golden pocket. We just keep chopping. Maybe we do hit the golden pocket, and then it's just more of this, all right? Remember this painful, disgusting, grindy action that we had here? You know, coming down to this low of nothing for days. This is our 4-hour time frame here. Literally, we stayed in this range here for a whole week, right? But we kept getting lower and lower and lower and lower. Basically, we had Jerome Powell speak here, I think, right? Wasn't this Jerome Powell's speech or something? We have something similar to this, a slow grind. If we have a slow grind here, all right, well, what could happen is, let's say we do this, and then we get you know, and take some time, and, you know, get a little this, and then a little bit of that, okay? What's going to happen then is we'll have enough time to actually make a lower momentum wave here, all right? Which means we'll now have a hidden bull div here, right? And so in a quick drop, we want a regular bullish divergence. In a slow drop, we want a hidden bullish divergence, all right? Then I would say it's fair to desire bull divs on the 1-hour, 24-minute, 12, and 6, all right? All right, so let's go ahead and do our example again, right? In this case, we need a 1% stop loss, give or take, probably like more than that, like let's give it a 1.5% stop. All right, in this case, 1.5% stop instead of doing 0.004. We're going to do 0.014. All right, so we're going to be putting less money on the trade now, because if we do that calculation, we do 10 divided by 0.014. Now we're putting $700 on the trade, all right, instead of 2,500, right? 700 on the trade. Then our TPs. So TP1 is going to have to be value area high of the range because this is a swing trade. So that's a 4-to-1 risk reward ratio. TP1 at 120 bucks. $120 Bitcoin. You know what I mean? 120K. That's $20 at our TP1. Then I would say, you know what? Yeah, that's a good TP1. And then I would let a runner run. And I would then shoot for higher than 125. I would shoot to front run 130. I would say 127.5. All right, 127.5. Take another 50% out. The reason why I say 127.5 is because everybody's shooting for $130,000. And that's going to be another 20 bucks. So look, we're risking 10 to make 40 here. You could either close the whole trade for a $60 profit or let a runner run. All right. I can't type. It's hard to type on a treadmill, I'll be honest with you guys. Also, I have a mic in front of my face and I can't see the keyboard. And I don't know how to type without looking. I'm a 2-finger typer. I'm sorry. So you risked 1 to make 60 and 2 take profits. All right. So just to kind of make things a little bit easier to see here, this would be the sample plan here for shooting for a new all-time high. All right, and at the very worst, right, the very worst on this trade, we risked 1 to make 2. Now, I know, like, here's the thing. Let's be honest. If you're trading with a smaller account, like $1,000, you're like, really? Like, I'm only going to make $60 on this huge move here? Yeah. But you can't think of it in that way. You have to think of it as you made 6% on your whole account in 1 trade. That's amazing. That is amazing. 6%, 1 trade, whole account. You know, people don't do that with traditional investing, right? Now, of course, our first trade is better. You're potentially making 9% on your whole account, right? But, you know, you're consistently making 2% here, 1% there, 3% there. Then eventually you get a 6 and 9% gain. This adds up. And before you know it, you've literally doubled your account. And every time you get a winning trade in there, you're trading with more money, right? So just focus on the process. Don't focus on the money. Otherwise, you're going to get wrecked. If you focus on the money, you're absolutely going to get wrecked. All right. And then if you're trading with $100,000, you know, now you're making $900. I mean, if you're trading with $100,000, you're making $9,000. I mean, you're trading with $10,000, you're making $900. You know, $100,000 account, I feel like is a pretty good place to be. 100,000 to 250K, a pretty good, comfortable place to be where the gains are good, and you don't have to force anything. You don't have to try and scalp every little, you know. All right, so let me put this in a folder here. And remember, guys, there are, you know, crypto prop firms now too, like Klein Funding. I've got those discounts if you want to dabble in that. But just please make sure you know what you're doing if you're going to dabble in that. But it is a good way to, if you don't have capital but you do know how to trade. But please make sure you have good discipline and all that, because trust me, there's no shortcuts in trading. There's no shortcuts. All right, so we've got our first long here. We've got our second long here. I'm going to have to say, guys, that the third long, so here's the deal. We have these levels, all right? We have these levels down yonder. Let's adjust our fibs to make them more precise right now. I say that these levels are still valid, like coming down to the POC of the range here, to the 786, to the value area low and weekly. These are levels to be looking for trades. But really, if we're going to lose value area high, value area low becomes most likely. So if we're losing 113, I would expect to move down towards 108. But really, I'd say that the best area is going to be coming down to around our daily level at 105, taking out this low with extremely bullish divergences now across all time frames. So you know, this September long one, I'd say it's still on the table for me if we do come back down here. You know, just making a nice double bottom here, basically, but taking the liquidity. Double bottom, take the liquidity, and then pump. This would be my... Let's do this. This would be my preferred setup, but just know that these green boxes are places to look for trades for sure, because they are supports, all right? So the next trade I would personally be interested right now is going to have to come in on a lower time frame here, preferably upon FOMC, is the short trade from 118. All right, from 118, we have our Fibonacci golden pocket, you know, our 618, our 0.65, the POC of the range. All right, so we're basically looking at something like this here. You know, something like this. And really, if we do reject from here, this is a short trade that I would hold. All right, I just the way I personally like to trade right now, I'm going to be holding this in case of a massive dump. I might take a profit one at 113 just to like guarantee a break even or something, right? But in general, this is the trade that I would hold in the event of an actual lower low, okay? This is the way I would do it, simply because, keep in mind here, I'm long from the lows, and I'm in positions, basically. I'm in long positions here, and I'm still expecting higher prices. So what's basically going to happen is, if we're going to take all this liquidity here, right, in this channel that looks totally wreckable when you draw it that way, right? Well, then I'm losing money on my longs the whole way down, right? So I would plan to hold this short all the way down. If I take a short and I take it and we just continue to do this, I'll take that loss, because the short trade loss will be covered by my longs. I will still be up massively in profit even with that stop loss. Remember, we're risking 1% here, right? So this would be my short plan. This would have to be my short plan here for the day and for the rest of the week. And really, this is a 10-to-1 risk reward ratio here. I would TP1 at the daily down here, or at least at 107. At 107 would be a TP1 for me to lock in something here. All right, New York has opened, so we're getting a bit of a dump, but I would definitely be looking for bear divs on the 4 hour, the 1 hour, 24 minute, 12 minute. Money flow decrease. And this would be the short. All right. Really though, guys, this short, you could be looking, even just taking that high there, honestly. This is the better level. But taking this high in general, 117.3 again, is kind of good enough. I personally feel that we are going to come higher here just because we didn't take the liquidity. We didn't even take the liquidity from Friday, the 22nd of August. But this is the zone to be looking for. All right. This is going to be our short trade. Now the same planning applies for your position and your stop loss and all that good stuff, all right? It's all the same. It's all the same. Just a quick reminder, guys, the code to get eggs for this stream is J. Capital J, lowercase a, lowercase y. J. Hey, Jay! Let's go ahead and make a copy of the shot. Alright, so yeah, let's now see if there's any questions up in here. Shout out to Boyan. He says, why are you copying me, bro? Copying me. Well, you know, look, I want to catch people off guard. It's like when you're playing rock, paper, scissors, and you make the same move twice in a row. To catch the other person off guard, right? Rock, paper, scissors, shoot. You do rock. They do rock. It's a draw, right? Then rock, paper, scissors, shoot again. Now they think you're not going to do rock a second time, because that would be dumb, right? So they do a scissor, but you do rock a second time to catch them off guard, and then you beat that other person. Alright? That's why I'm copying Bojan, aka Boyan. Alright, Boyan, aka Bojan. Or Bojan. Depends on your American accent. Alright. Let's zoom into a lower time frame here. Set some alerts here. Was this monthly, Naked Monthly, already a thing? We better get rid of that. We hit that. No wonder we got a bounce. Man, I wasn't paying attention to that. Shoosh. What are my thoughts on the monthly red dot? I think retail, Ryan, it means the end is near, man. The end is near. That's what I really think. If I see a bounce from the Val, shouldn't I set my stop below the low? Or should I put it under the... So here's... Under the 786, I mean, it really depends. It really depends, to be honest with you. It depends on how much much you want to put on the trade and all that, right? Under the low is obviously always the safest. The 786 is pretty safe. The 886 is very safe. I mean, if we're losing the 886, there's a very low chance that we're not going to make a lower low. But yeah, the safest place is the low. You know, if you want to make sure your invalidation is as perfect as can be, below the low is best. Divine Hood asks, am I expecting a pump into resistance and still news? Yeah, I mean, that's definitely what I'm planning for here. For sure. 8Lug Mafia says, tried to sign up with Antarctic, email verification won't work. Okay, did you try the channel in the Discord? Try the channel in the Discord. We have exclusive Antarctic support up in here. Would anything change if, in the rare occurrence, we get a 50 beats per second rate cut? That could be bearish, Diego, because people might look at that as the Fed like FOMOing to cut rates because things got things are too bad. Look, I think the most important thing here is this: we expect short-term volatility when the announcement happens, and then the market will pick a direction. And so we got to be focused on trading our levels, and that needs to be the primary focus: levels and confirmations. Because again, you can drive yourself crazy thinking about different scenarios depending on different newses. But the charts are the charts no matter what, right? I think if we get a 50 basis point cut, it could lead to a pump and dump big time in the short term. Everybody's feeling very bullish on this rate cut, which is something to take into account. And we are coming to a resistance. And there is one thing that I also need to, I feel is relevant right now for us, which is this: the move up so far, guys, has been absolutely brutally slow. And usually when you get bullish action that's brutally slow like this, you could have a quick move down. So I'll be honest, I'm probably, all right, I'm going to open up a short at the Golden Pocket, man. No matter what, I'm going to short the 118. I'm just being honest. I'm going to short it no matter what. If we get a move up there, I'm going to short it with good risk management. You know, for me, it's one of those levels where, you know, if the top is in, this is the lower high. We got macro, massive confluence, naked weekly, naked daily, regular POC, the Golden Pocket. It's a beautiful level, really. So that's what I would really just be aware of, honestly. Slow, painful move to the upside. It's been slow and painful, let's be honest. I've been long since Friday, August 29th. And I mean, we're coming up, that's like 3 weeks. Almost there. Yeah, about 3 weeks here, and it's just a slow, painful move to the upside. You know, it's nothing like this. This move to the upside here from support happened quick. You know? So it's just something to be aware of. Look, at the end of the day, it's all about the levels and the confirmations. That's all it's about. Yeah, rate cuts are still the news. Absolutely. The rate cuts are probably already priced in. Probably, right? Yeah, definitely good things to think about. Shout out to Crypto Con. What's good, fam? What time are we expecting to move? It's going to happen at 2 p.m. Eastern time. I'm going to go live. And we'll see how it goes. You know? Hopefully I'll be there to do the sign language and all that kind of stuff. All right, y'all. Well, I am going to head out. That's pretty much it. I don't see any more questions in here. So, yeah, we'll be live in approximately 2 hours or so, around 1:15 p.m. Eastern time. And, yeah, it's going to be an exciting time to watch the volatility for sure. So God bless you guys, and I'll see you in the next one. Peace!